Hello there, future investors. Today, we're diving into the exciting world of investing for beginners, and we're excited to share a step-by-step guide that will help you get started on your investment journey. If you've ever wondered how to start investing and grow your wealth, you're in the right place. So, buckle up and let's get started on your journey to financial success. Welcome to Top Tier Success, your ultimate destination for everything business, investing, and self-development. Our channel provides you with valuable knowledge and proven strategies to start and grow your online business. We're all about attaining financial freedom and living life on your own terms. Don't be the last one to the party. Hit that subscribe button now, and we promise to keep the videos interesting and the jokes hilarious. Don't believe us? Well, there's only one way to find out. Subscribe and see for yourself. Step 1. Understand the basics. First things first, let's talk about the basics. Investing is all about putting your money to work for you, to earn a return over time. There are various types of investments, such as stocks, bonds, and real estate, each with its own level of risk and potential reward. Remember, the higher the risk, the higher the potential return, but also the greater the chance of losing money. Investing allows you to grow your money over time, so you can achieve your financial goals, such as buying a house or retiring comfortably. The earlier you start investing, the more time your money has to grow, so it's never too early to start. It is important to educate yourself before you begin investing. There are countless books, videos, and online resources out there to help you learn the basics of investing. You don't need to become an expert overnight, but it's important to have a solid understanding of the concepts before you start putting your money on the line. Step 2. Set your goals. Before you start investing, it's essential to set clear financial goals. You need to determine your investment goals and risk tolerance. Are you saving for retirement, a down payment on a house, or your child's college education? Are you investing for short-term or long-term goals? How much money are you willing to invest, and how much risk are you willing to take on? These are important questions to answer before you start investing. Knowing your goals will help you determine the right investment strategy and time horizon. Step 3. Choose your investment platform, account. Now that you have your goals in mind, it's time to choose an investment account. There are plenty of options out there, such as a traditional IRA, Roth IRA, brokerage account, and even robo-advisors. Each account has different tax implications and restrictions, so it's important to do your research and pick the one that best suits your needs and preferences. Step 4. Pick your investments. As a beginner, a great way to start investing is with low-cost index funds. These funds track the performance of a specific market index, like the S&P 500, and offer instant diversification at a low cost. Plus, studies have shown that most actively managed funds don't consistently outperform their benchmark indexes. Later, you can choose to invest in individual stocks, mutual funds, exchange-traded funds, ETFs, real estate, etc. Each investment has its own level of risk and potential return, so it's important to do your research and choose investments that align with your investment goals and risk tolerance. Step 5. Monitor your investments and diversify your portfolio. Investing is a long-term game, so it's important to monitor and adjust your investments as needed. Once you've chosen your investments, it's important to monitor them regularly to ensure they're performing as expected. You should also consider rebalancing your portfolio periodically to maintain the right mix of investments. Over time, your portfolio's asset allocation may drift away from your original target due to market fluctuations. It's essential to periodically rebalance your portfolio by selling some assets and buying others to maintain your desired risk level and stay on track with your goals. You know what they say, don't put all your eggs in one basket. Diversification is key to managing risk in your investment portfolio. Spread your money across different asset classes, industries, and geographic regions to minimize the impact of any single investment's poor performance. Step 6. Keep learning and adjusting. Investing is a wild and exciting ride, and it's essential to stay on top of your game. Always be hungry for knowledge about new investment tricks, market craziness, and financial news. With more experience and guts, you can tweak your investment style to match your objectives and risk appetite. Don't stop growing and learning. The investment landscape is always evolving, so don't fall behind. Keep up with the latest by reading the news, tuning into podcasts, and attending seminars. Step 7. Stay consistent and patient. Stay consistent with your contributions and avoid the temptation to time the market or make impulsive decisions. Remember, it's not about timing the market, but time in the market that counts. Be patient and let the power of compounding work its magic. And there you have it, folks. a step-by-step guide on how to invest for beginners to help you kickstart your investing journey. Investing can be a great way to achieve your financial goals, but it's important to do your research and start small when starting out. Investing may seem intimidating at first, but with a little bit of education and some careful planning, you can start building your wealth and securing your financial future. It takes time, patience, and dedication to achieve your investment goals. Remember, the sooner you start, the more time your money has to grow. So, don't wait any longer. Take that first step today and set yourself on the path to financial success. If you found this video helpful, be sure to hit that like button, subscribe to our channel, and share it with your friends who might also be interested in investing. And, as always, if you have any questions or suggestions, drop them in the comments section below. Thanks for watching, and until next time, happy investing!